Hello all, welcome back. Namaskar. The topic I want to discuss today is Accounting Standard 2, Valuation of Inventory. Valuation of Inventory. So this is one of the major topic where you may get a theory question or even a practical question. As this standard is a little big, I am going to split this video into two parts and you are currently watching part 1. Let's start. First thing, what is inventory? Inventory is assets held for sale in the ordinary course of business, which means any assets held by the company for selling in their business. Like it is the nature of business is to sell these goods. For example, for a car showroom, a car is an inventory. For a shoe manufacturer, shoe is an inventory. Okay? Right. Then those assets held for production process of such sale. So these are basically the raw materials used in the production process. The metal used in the metal, tires, etc. being used in car manufacturer or inventory for him. And third one, for consumption of production of goods. This basically is like stores, spares, etc. The diesel used in to run a generator is considered as an inventory for the company. So these inventories are either raw material, finished goods, or even sometimes work in progress held by the company. This is called as inventory for the company. Okay, nice. Then couple of things are excluded from accounting standard 2. The below are excluded from AS-2. They are work in progress arising under construction contract. So if a person is constructing a building, that is also work in progress, but that is not considered as inventory for AS2 because it is covered under one more standard, which is AS7. Okay, right. Then work in progress from ordinary business of service provider. So for a service provider, suppose we are a chartered accountant, if you are providing service, half completed service is not considered as inventory for AS2. Okay, right. Then the third one which is not considered is shares, debentures and other financial instruments like bonds, etc. These are not considered as inventory as per AS2 because this is considered in a different standard called AS13. And finally, producer's inventory for livestock and agriculture. So any agricultural produce, the fruits, livestock, animals, all these things are not considered as inventory under the definition of accounting standard 2. Okay, so inventory is any assets held in the normal course of business for production of such goods and for consumption. Basically we are saying finished goods, work in progress, raw material and stores. Nice. The first part of his standard is inventory. Second part is valuation. How are you going to do the valuation? How to calculate inventory is the question. Right? Valuation is nothing but calculating the amount. So inventory is valued at cost or NRV, whichever is lower. Cost means the amount you spent to acquire the inventory. NRV is net realizable value. If you sell today, how much amount you are going to receive for that inventory is called as net realizable value. Okay, nice. So what are we going to do now? For raw material, the calculation is different compared to finished goods, and we need to discuss all together now. See, for raw material, generally cost or NRV, whichever is lower, you will take. But sometimes finished goods are sold at a price higher than the cost. In such a situation, even though NRV is less, still you consider cost as the inventory. If finished goods is sold at profit, then cost is considered as inventory valuation at the year end. Okay, right. Whereas for finished goods, It's not just cost, right? The cost includes cost of purchase, cost of conversion, and other costs. All these things are considered as cost. It's not just the regular cost. So we'll see each thing in detail. Let's see. So what is cost? Number one is cost of purchase. This essentially means the amount you pay to the supplier for buying the raw material. This also includes transportation, any non-refundable taxes, and any other expenditure incurred to get the material to the godown. All these things are considered as cost of production. Then comes cost of conversion. Any amount you spent on the raw material to make it to finished goods, such as direct labor, direct expenditure, any factory overheads, all those things are considered as cost of conversion, right? Yeah. And then we have other costs. These are generally designs, any what do we say, royalty. All these other costs are considered as other costs for us. All these things will be added to the cost of inventory. Few things are also excluded, right? Those things which are excluded are abnormal wastages, which means normal wastage is considered as raw material cost, but abnormal wastage, if the nature of the inventory is such that, say, you are bringing fuel, petrol, on the way, say 2% will evaporate. That is called as normal waste. So that cost you consider as inventory only. But over and above that 2%, you wasted another 5%. So this 5% is not added to the cost. Second one, storage cost. Generally, storage cost is not added to the cost of inventory. Only exception if it is required for production. The storage is required for production. In such a situation, yes. Suppose the nature of inventory is such that you need to put it in the fridge. So that storage is considered as cost of inventory. And third one, admin overheads. Any administrative overheads, the cost of administration office, rent, etc., are not added to the cost of inventory. And finally, selling and distribution, because it is not relating to production, right? After production, you are going to sell, discount, etc. These are also not considered as inventory cost. Make sense? Yeah. Then the company need to consider a cost formula for valuation of inventory. Generally, people follow either FIFO method or weighted average method. FIFO method means first in, first out, which essentially means the raw material you purchased first, you will use first. Then only you will use the second material. Suppose I purchased 100 items at 10 rupees per item, then I purchased another 100 items for 11 rupees. As per the FIFO method, I am going to use 10 rupees per item 100 first, then only I will use 11 rupees per item second. This is called as FIFO method. There is one more method called weighted average method. So you will consider the average price of both the items. That is called as weighted average. So a company can choose either FIFO method or weighted average method. That is called as their accounting policy. Only thing is, the formula used should reflect the fairest possible approximation of the cost. Whichever formula is appropriate for the cost, that formula you need to use. You cannot just use FIFO method because it is easy. You need to use the method which approximates the actual cost. That formula only you are supposed to use. Make sense? Great. There are basically few other points which are, you need to compare the cost and NRV of the items individually. For example, I have material A, material B. Cost NRV. So material A cost is 100, NRV is 101. Material B cost is 101, NRV is 100. So what I have to do, I have to compare material A cost and NRV and select cost which is lower. And material B NRV is lower, so I will select 100. Right? So each item I will select separately, compare separately. Instead, I will not add all the things. Make sense? Great. Next. Yeah. Value inventory at cost if selling price of finished goods is more than the cost. Suppose for a particular raw material, NRV is less than cost, but after the completion, the finished goods is going to be sold at a price higher than the cost. In such a situation, instead of valuing it NRV, you are going to value it cost itself. So this is more important. So if the finished goods is going to be sold at profit, value that inventory at cost only and not NRV when it is lesser. And finally, the company need to assess NRV of all the items at each balance sheet date. If you prepare balance sheet monthly, calculate NRV each month. If you are preparing financial statements annually, you need to calculate NRV each year. Something like that. Okay? Nice. So, what all we studied till now? First, inventory. What is inventory? These are the assets held for sale in the ordinary course of business, in the process of production of such sale, and for consumption in the production of goods and services. Then, certain things are not considered in AS-2, which are work in progress of construction contracts, work in progress from ordinary activities of service providers, shares, debentures, and other financial instruments, and producers' inventory such as livestock and agriculture produce. Then, inventory is valued at either cost or NRV, whichever is lower. NRV means the amount you are going to get if you sell the inventory today. Whereas cost generally have three components: cost of purchase, the amount you pay to the supplier, plus any cost directly attributable to the inventory, excluding any refundable taxes. Non-refundable taxes consider. Cost of conversion is direct labor, factory overheads, etc., which are incurred to convert the inventory into finished goods. Other costs generally are designing, royalty, any other directly attributable costs. All these together will be considered as total cost of inventory. Certain things are not considered in cost, which are abnormal wastage, storage cost, unless that storage cost is required for the production, administrative overheads not considered, selling and distribution overheads not considered. And the method applied to calculate inventory is called as cost formula. Generally, it is either FIFO or weighted average. The formula you should use should reflect the fairest possible approximation of the total cost incurred. Great. And then we say we need to compare cost and NRV of each item of inventory. Value inventory at cost if selling price of finished goods is higher than the cost. And finally, you need to assess NRV of all the items at each balance sheet date. Finally, we need to show the disclosures. These disclosures are majorly the company need to disclose the accounting policy adopted in measuring inventories, including the cost formula. Suppose the company is following FIFO method. In the financial statement, we need to disclose how the company calculates the cost of inventory. Like the cost includes the amount paid to the supplier plus transportation minus non-refundable taxes. And the cost formula used is FIFO method. That is the accounting policy you need to disclose. Second, the company need to disclose total carrying amount of inventory together with classification appropriate to the enterprise. In the balance sheet, you will show inventory as a current asset. Then you need to show the classification, like out of this, how much is raw material, how much is finished goods, how much is work in progress, all the things you are going to disclose. Here it is given: raw material, work in progress, finished goods, stock in trade, stores and spares, loose to all these things you are going to disclose in the financial statement. That is called as disclosures for AS-2. Great. Yeah. So this is from me with regard to the explanation part of AS2, which is the part 1 of this standard. In part 2, I am going to teach about illustration problems, examples, and also some practical problems for your exams. Okay. I'm going to post that video also very soon. Till the time, if you like the video, please share with your friends who also do or also are studying CA Inter. Thank you once again. Namaskaram.